my point was there's a wall of money ready to come in from these treasury companies. That flow is actually bigger than the first half of the Bitcoin ETF net flows in 2024.
Crypto expert Jeff Park, who is the head of Alpha Strategies for Bitwise, so he is a crypto expert.
Jeff Park here is the head of Alpha Strategies at Bitwise. Bitwise, one of the leading, I think I'll say, institutions out there right now,
has put the world on notice that this is always what it looks like before a supply shock. T-minus 60, meaning we have about a 60-day warning, a window based on this waning Bitcoin volatility, 60 days before this market explodes. And it's one thing to say it, let me like the video and prove it to you. The quants are saying it will be obvious in hindsight. What will be obvious? Well, looking at the volatility, the options implied volatility, this is a ticking time bomb. The implied volatility is extremely, extremely low. And by the way, while the implied volatility is extremely low, the open interest, meaning the leverage in the system, is near multi-year highs. The leverage today is so much higher than we saw at the beginning of the year in 2025, and so much higher than we saw during the bubble of 2021. So what does this mean to me? What does this mean to me as a crypto investor? Well, you subscribe to Altcoin Daily for an edge investing in crypto. It is completely free. It costs you nothing. Click subscribe to stay informed. But let's start with this: the volatility, the implied volatility, and the 60-day countdown. The implied volatility floors this flat usually means one thing: violence is brewing. The market's asleep, but the supply side is about to kick in the door. And we can see that right on the chart in the data. Last time we got to levels this low, the ticking time bomb kicked in again. And we see right here what happened to Bitcoin price. We see right here, really is the last time before that, what happened to Bitcoin price. Everyone is bored, there's a low engagement, and weak hands are capitulating. And you subscribe to Altcoin Daily for perspective. So when this chart shows that Bitcoin futures open interest nears $80 billion, is that good? Is that bad? Most people automatically assume it's bad, but just understand that leverage and open interest goes in both directions. So really, when we see data like this high, it simply means that the next move, whether that's up or down, is going to be explosive. The more open interest, the more volatility, explosive volatility you should expect. And Jeff Park is, in this tweet, assuming we're going to see a supply shock, meaning we're about to see, again, we don't know when, but within 60 days, volatility to the upside. How is he so sure? How does he know this will be good?
And so the ETF flows are incredibly important to watch because, in my opinion, that represents the most seismic shift of capital allocation of a community that hasn't existed before. And the thing we know about Bitcoiners and new Bitcoiners as well is those that buy tend to not sell. And the journey of these ETF investors are pretty much the same. They're just happening to do it a lot later than the folks that are in this room, but these investors are not looking to buy and sell.
So who's not selling? Because Jeff Park isn't talking about BlackRock and Fidelity, they're high net worth clients who buy through the ETFs. BlackRock will sell, but it's these Bitcoin treasury companies, these public companies that have to disclose. They're buying and holding for years. They're not looking to make a quick 30% profit. Strategy, Michael Saylor's company, only accumulating. And these pension funds, which are a whole new pool of capital coming into Bitcoin, they're looking for a store of value for the long term.
If you go through the IC of getting it through a pension or an endowment, and let me tell you, I've been on this journey for 7+ years trying to explain the IC, once they make that decision happen, they're not doing it to make a 3-month tactical trade that when Iran happens that they're gonna sell it. They're doing it because the commitment that it takes is decades long. So that's essentially what you're seeing in the microstructure of Bitcoin changing, that the demand is there, but the demand is also long-term. And so when you have treasury companies too, where their money is lined up now close to, I think, as I've calculated, $15 billion that will come online in Q3 when the SEC approves a variety of these deals, that flow is actually bigger than the first half of the Bitcoin ETF net flows in 2024.
And again, because these publicly traded companies have to disclose, we know that the amount of demand about to come into Bitcoin is greater than the demand that we saw take Bitcoin from around $30,000 to over $69,000. That was a clear 2x.
My point was there's a wall of money ready to come in from these treasury companies that have been lined up. So not even including Strategies 21 plus 21 or Meta Planet's 5 billion. Those have been earmarked but unraised. Even including GameStop's converts that could potentially come to Bitcoin and everything in between with the SPACs and the pipes, it's over $15 billion. And that number is bigger than the first half of Bitcoin ETF flows that we experienced in 2024. So the structural change we're seeing is a pretty meaningful one. And the other thing I love about these Bitcoin treasury companies, for the most part, these are never gonna sell Bitcoin.
I was about to ask
because the entire point of the treasury company in the way that it's meant to bring value is that it has to be part of a permanent capital holding co vehicle. So these Bitcoins that are coming by treasuries are forever, in a way, locked up.
So again, leverage is not bad. It's completely legal, but just understand the beast. And just understand when implied volatility gets this drastically low, like we've seen with crypto, with Bitcoin before, the next move, whether that's to the upside or the downside, will be explosive. And especially with T-minus 60 in this 60-day countdown, there is a danger zone that investors should understand. Also, anybody that wants to trade, we have a special promotion with exchange partner WeX. The WeX $1 Million Futures Season 2, with over $2 million up for grabs. You have 3 more days to register. If you are a trader, there's currently not that many participants in the global scale of things, and there's daily spins to win millions of dollars as the trading volume grows, as well as a Bentley Bentayaga up for grabs. If you want to win a Bentley, there's a link down below, and this is only with referral code Altcoin. If you're asking what's the catch is we're in a bull market, and these exchanges are looking to get your business, and they will offer these incentives to the customer so you choose to trade with them. The customers benefit in a bull market. And Bitcoin analyst warns that $105,000 Bitcoin is the danger zone as open interest stays frothy. And people throw out projections all the time, but I did really like this one because it is backed up in data, actually some on-chain data. So there's a potential hidden risk zone for Bitcoin at around $105,000 level, which means in this interim, it might not happen at all. There are no guarantees. I cannot see the future, but Bitcoin might, if there's a level Bitcoin dips to, it might be 105 for these 3 reasons. The UTXO cost basis histogram. UTXO, for those who don't know, is basically the last time Bitcoin moved, or the last time Bitcoin got spent or bought. The UTXO cost basis histogram reveals a significant wall at around 105,000, suggesting high on-chain accumulation or realization at this price, meaning based on the buying, this is a support level at around $105,000 Bitcoin. Also 1 to 3 month holders, meaning people that have owned Bitcoin for the first time for 1 to 3 months. Realized price also hovers near $106,000 BTC, reflecting the average cost for midterm holders. So again, 106 is a support level for midterm holders, and short-term holder realized price aligns closely at $105,000 Bitcoin, showing the average acquisition cost for BTC held less than 155 days. For those of you shorting Bitcoin, for those of you longing Bitcoin, if Bitcoin dips, it'll likely be just above these levels. But as Bitcoin volatility wanes lower and lower, the next time we have a big move, it'll likely be to the upside because this Bitcoin open interest, which shows calls and puts, bullish and bearish, these options are skewing bullish. Keep in mind that options expiry data reveals concentrations around August 29th, about less than 30 days, September 26th, that's the 60-day timeline, and December 26th, with significant value stacked in both calls and puts. Essentially what this means, and I would pay attention to the 60-day window, September 26th, is as these dates come around, you are going to see whales manipulating the market. If they have a call or a put on a certain price, they're going to try and push the price to a certain level on that expiry date so their options put or call wins. Let's revisit this in the coming days and weeks. As I get more information, I will keep you updated.